de-escalationstrategy.com.
Hello, this is Daniel Grady with a quick look at the markets for today, Tuesday, April 1st. We have a pretty busy day coming up, starting at 7:55 GMT when we have unemployment data coming out from Germany. At the same time, we also have manufacturing PMI from Germany. 5 minutes later, we have manufacturing PMI for the entire Eurozone. Then at 8:30 GMT, we have manufacturing PMI from the United Kingdom. At 9 o'clock, we have unemployment rate for the entire Eurozone. Then at 1:30, we have manufacturing PMI from Canada. And then we have the same manufacturing measurement at 2 o'clock from the United States. So manufacturing is dominating the markets today. Well, moving over to the markets, the S&P 500 rose yesterday. This was after comments by Fed Chairwoman Janet Yellen, who said that commodity measures from the Fed are going to continue for some time, which led investors to have a more positive outlook, particularly in emerging markets. During the Asian session, Asian stocks swung during the session, however, ended up positively. We had two indicators, PMI indicators came out yesterday and helped fuel speculation that the Chinese government might help support the markets in the short term. However, S&P 500 futures at the moment are trading pretty much flat. Despite this, an analyst from Credit Agricole, the World Trading Bank, said that investor sentiment is most likely going to be risk on at the moment, especially considering how the situation in Ukraine, tensions over the Crimea are starting to de-escalate at the moment. So we have a general risk on environment. Investors are interested in taking on more risky assets, including emerging markets and emerging market assets. The euro continued to move higher. It bounced off at the end of the week. Last week, it bounced off at 137.40. And since then has been moving higher. 137.60 at the moment is support. Above that we have 138.40 as our next level of resistance. The pound is also continuing to move higher. Yesterday it tried to get above 166.70, which is our current resistance level, which is just a fraction below that. If it breaks through there, we have 167.50 as our next level of resistance. And on the downside, we have 166.10 as support for the moment. The yen is continuing to demonstrate weakness against the dollar. The yen is generally considered a safe haven asset and has more demand during times of market uncertainty. And now that we have a risk-on environment, we could see more weakness in the yen. It came up to 103.30 yesterday, but didn't manage to break through. That's our current resistance level, and we have support at 102.75 in the short term. And then finally we have gold. Gold yesterday continued to move on the downside and is moved into the definition of oversold. According to the RSI, it's below 30 on the RSI. However, the price of gold, is also considered a safe haven asset. So, depending on the de-escalation situation in Ukraine and other risk trends, we could see gold continue to move on the downside. However, with RSI at the moment and breaking through the important 50 Fibonacci retracement level, we could see a short-term correction here for gold. The next level support is at 1,265, or if we get a correction, we might retrace back to resistance at 1,310. And that's it for today. Thanks for watching and happy trading.